As the clock ticks down in Washington for Congress to pass a government spending bill and raise the debt ceiling, lawmakers also have the challenge of passing President Biden's trillion-dollar infrastructure bills. Here to talk about the effects the proposed tax changes in the infrastructure bills would have is local financial professional Brian Mirau. Brian, thank you for coming on. First of all, talk about those proposed changes in the tax rate, because a couple of these changes would appear to affect a lot of small business owners in El Paso.
Oh, absolutely, Mark. Thank you so much for having me today. You know, the first thing we want to talk about are some of the tax rate changes, and it's going to affect corporations as well as individuals. For example, what's being proposed on the corporate tax rate change is they're looking at increasing those from 21% up to 26.5%. And from an individual standpoint, they're going to see the individual tax rate raised for individuals and married couples. The top tax brackets are looking at being raised from 37% up to 39.6%.
And you've also got a capital gains rate that'll probably be going up, right?
Absolutely, yeah. We're looking at a capital gains rate going from 20% up to 25%.
All right, Brian, so how can people prepare their nest egg to meet these proposed changes?
Okay, Mark, the first thing you can do is you can diversify your investment portfolio. You want to make sure that you do not have all your eggs in one basket. You want to have a diversified set of investments inside your portfolio so that you have good balance inside there. And not only do you want to have a diversified portfolio, but you also want to be diversified from a tax standpoint too. We call this tax diversification. You have two different types of accounts. You have tax deferred accounts, and these are accounts like your IRA accounts, your 401ks, your 403bs, and so forth. And what you do with these accounts is you fund these with pre-tax dollars, so you get a tax break when you put it in, and then it accumulates tax deferred throughout your lifetime, and then you have to pay taxes on it in retirement. Now we compare that to what we call a tax exempt account. These are accounts like Roth accounts. In Roth accounts, you actually pay tax on these accounts early on when you make your deposits, but then you have tax-free growth and tax-free distribution on the back end. And the other thing you might want to think about is you want to look at tax harvesting. It's what we call tax harvesting, is where you can offset your gains that you have on different investments with losses that you have. Now, you cannot do tax harvesting on IRA accounts and qualified accounts, as they call them. These can only be done on non-IRA accounts where you have tax losses.
And you're also suggesting too, Brian, that people should plan year-round.
Yeah, absolutely. That's one of the biggest things you can do is you can plan year-round. And you know, we find that about half the people in retirement out here today, you know, they're saying that they're spending a lot more money on taxes, and that's probably because 1 out of 4 people are having to spend thousands of dollars more on taxes than what they had anticipated. And you know, it's better to plan on this early on in your lifetime so you can reap the benefits of this in your golden years in retirement. You know, retirement planning is a huge thing that you need to put in front of you and keep in front of you, and there's 4 things that you really want to be efficient against when it comes to your tax planning. You want to make sure that you're tax efficient against unnecessary taxes, and you want to be efficient against unnecessary fees and expenses. And it's very, very important that you understand this and you do this in your planning. And another thing you want to keep in front of you is this thing called inflation. You know, inflation over the last 10 years has been running a little less than 10%, but you know, we're already seeing this jump between the 5% and 6% rate this year from that inflationary standpoint. You know, we think that that planning for your retirement and tax planning in your retirement needs to be part of every financial plan. It is for every one of our clients, and there's ways that you can look and see what your tax picture is going to be looking like. We actually do an in-depth tax analysis for each and every one of our clients, and so you'll know that what your tax situation looks like and if you're going to be tax efficient as you go through retirement.
Financial professional Brian Mirau with Mirau Capital Management, thanks for coming on today.
Okay, Mark, thank you so much for having me, and you have a good day.